Dear students, we will do module 86. This is deductions from gross total income, section 80C, part 2. See, in part 1 of section 80C, I have explained the theoretical concepts. In this problem, we will do one problem and I will tell you which all payments assessee has to make in his own name. Some payments he can do it in the name of the spouse, children. So this two tables first I'll give, then we will do one problem to learn the top points in detail. So first table what I want to explain is persons whose names can be made under section 80C. Persons whose names can be made under section 80C. Name of the individual only. So these payments can be made only in the name of the individual. First is contribution to recognized provident fund, statutory provident fund and approved superannuation fund. Second is contribution made for a deferred annuity for government employees, the retirement benefits. Next is tuition fees paid for 2 children. Fourth is investments in national saving schemes, 8th and 9th issue and interest accrued thereon. So these national saving certificates, interest will not be credited every year, it will be paid at the time of maturity. But at the back side of the instrument, the interest due for that year will be mentioned that we can include for income tax calculation. That is why interest accrued. Next is deposit in the notified savings schemes, contribution to group insurance scheme, investment in units of UTI or other mutual funds in equity linked savings scheme. Then any amount deposited under the home deposit scheme of the National Housing Bank, deposit with an authority engaged in housing development or town and rural development. See, Bangalore Development Authority, Jaipur Development Authority, Delhi Development Authority, all these are examples. Deposit with housing finance institutions, HDFC, HUDCO, all that. Any amount repaid under the house building loan. Only the principal amount. Interest we will take for computation of income from house property under section 24. Amount paid as subscription to equity shares or debentures of any eligible issue. Next, amount paid as subscription to any units of any mutual fund. Next is amount deposited in an account under the Senior Citizen Savings Scheme Rules 2004. So this has got a lock-in period of 5 years. Then if you are withdrawing before that, you have to pay tax. But if legal has a withdrawing that, it will not be taxed. Now, next list is persons whose names can be made under section 80C. Here name of individual, spouse or children can be included. One is contribution to public provident fund or PPF. Next is life insurance premium paid. You have to remember it can be made in the name of individual, that is the assessee, spouse, children, married or unmarried. But if the married girl or boy is taking it with the joint development of the husband and wife, then it will not be eligible. But you have to remember it is not allowed in the name of parents. Now premium for the unit linked insurance plan of UTI or other mutual funds. Now contribution to procure a deferred annuity, deposit in Sukanya Samriddhi account in the name of a girl child. Now this is the list. So this last module I have explained the schemes in detail. This two lists will, if you know that, you can check when you are doing the problems whether that particular item is eligible for deduction or not. Now problem 1, from the following particulars of Mr. X, compute the amount of deduction under section 80C for the previous year 24-25 under the old tax regime. So life insurance premium paid on own policy 30,000. 30,000 it's allowed. Next is on the life of wife 10,000 allowed. Next is on the life of father, it's not allowed for parents. On the life of a married daughter and husband as joint policy, it is not allowed. All life policies were taken in the year 2010. That meaning if sum assured was given, we have to check the actual amount paid and the 20% of the sum assured, whichever will be less, that only we can take it. Next is contribution to recognized provident fund allowed 24,000. 24,000. Next is deposit in public provident fund in March 25. Within that March 31st they have to make the payment. It is allowed 45,000. 45,000. Next is group insurance premium 3,000 allowed. 3,000 allowed. Next is investment made in national savings scheme, 8th issue, out of agricultural income. See, agricultural income is an exempted income, but there is no, we can allow that. There is no condition that whatever savings you are making, it can be out of exempted income also. So that is allowed 10,000. 10,000. Next item is repayment of loan from LIC for the construction of a residential house, rupees 4,000 per month, and rupees including rupees 1,000 as interest. So 3,000 into 12, 36,000 only can be allowed. Next is accrued interest on NSC 8th issue, 4,000. This will be allowed. And next is insurance premium on the life of a minor son paid on 2/4/25. That is outside the assessment year. 2nd April only he is making the payment. That next year he has to claim that. So this, all these items are allowed. So if you see 36,000. So if you see the LIC premium 40,000. 40,000. Next is 24,000 contribution to recognized provident fund. Next is contribution to public provident fund 45,000. Group insurance scheme 33,000. Next is investment in NSC 8th issue. Next is housing loan 36,000. Next is accrued interest on NSC 8th issue. So the total you are getting 1,62,000. Total qualifying amount is 1,66,000. But you know that we can allow only up to 1,50,000. So this value is restricted to 1,50,000 for ATC. So this is what I wanted to explain in this module. Happy learning. Thank you.